Alrighty, guys, and to wrap it up for today, this Friday, January 10th. And we got a kind of a mixed day, mostly to the downside, a few cross currents, but the employment situation definitely set the market off to the downside. They had and it was actually a good report. It wasn't a bad report. Question is just how much you can believe in it, but based on the numbers, it's a good report. Too many employee or government and healthcare jobs, I think, but it's not quite private sector job creation. But either way, it's a decent number there. And then the consumer sentiment was a little bit on the weak side, but so far it's not anything which was crazy in terms of markets falling out of bed. It did sell off. It's lower than I thought it would, but support did not hold where I kind of wanted it to this morning. That just set us up for a move out of the middle to the downside. So not by any means a crazy sell-off. A crazy sell-off would have taken us all the way down here towards the 57, 70s. So far, looks like support is holding here at that attractor area at the 58.60. So yeah, negative reaction to the downside, and we'll see how this continuation is going to shape up going into it's going to go into the overnight Sunday, Monday. So we get actually the full first week of trading next week without any interruption, I believe. I hope, maybe maybe I should check the calendar. Anyway, the at this point looks to me like a move out of the middle to the downside based on the employment situation. Good news, market reacted poorly, primarily because the bond market kind of reacted poorly to it, I think, and we are pointed lower. We had a pretty good attempt here midday to start squeezing this to the upside, and here we are. There was an edge at the 59.05, and that's kind of what we see right there. So halfway through it, in the beginning, it didn't look like it was anything there, but here on the retracement, you can see the ES got up here to that 59.05s and then finally ran out of gas. Stalls are trading back down, and now almost retraced it all the way down again. So a pretty interesting day. Definitely looks like we're going to get a weak close, which is not a great signal. So I'm going to start off this from the short side of the market, looking to sell strength all the way up to the 59.05s. Rotations back down. So we're going to adjust these edges a bit. It's going to definitely be an edge at the 59.05s. It's going to be one probably somewhere in the middle here, but if they start taking out that 58, 50, 45s on the low end of this and start extending, chances are we're gonna definitely retest the 58.25s, maybe even run it down to this attract at the 57.60. So who knows how far it can go. That's part of it looks like a decent pullback. High here was at 61.40. We are down here at the 58. So 600 points, it would be a 10% correction. We are about halfway there, I think, like 300 points so far. So we'll see. I mean, they can certainly go another 300 points to the downside. That will take us down into these lower ranges. That's maybe we're going to get a test of this gap closure before we are done. That would be interesting, right? Get a test of this gap up here back in the 56.50s. Could certainly happen. They had to run it down to the 57s and then down to the 56s, and then we get to the sixes here. Now we're looking at more like a 10% pullback. So pretty open on the downside if they keep going. So at this point, we're going to start off though from the short side and see how far they can take it. Looking to sell strength going into the overnight. No trades on the ES for me today. I did take a few trades on the NASDAQ. It has been too volatile. Days like this, sometimes I get too aggressive and I just get myself caught in a bunch of stuff. You get into it, it's markets moving. It's exciting, but it's just not worth it. Deliberate. Look for trade location is the way to go. On the bond market, way down. So this is the reason everything is kind of coming apart. Bond market is not reacting well to the good news, and bond market reacts like it is. It implies higher yields, or well, the yields are going up, but it implies higher inflation expectations going forward. So we were down, and so far no big retracement. They were up at 11, 24, 25. No really good retest. A couple of single prints still left here. So looking to sell strength all the way up here to those two single prints at 11.26s. Rotations back down again. I'm going to adjust these edges a bit, but chances are we're going to get the one edge here at the 11.24s. these single prints at the 26, 27s. We're gonna have one edge here at the 111.04s. We'll see if they can take that out before they close, but definitely lean towards a short shot on the bonds. Trade that on the short shot of the market. I think the yields are not done coming apart. It's not a free for all to the downside, but it's definitely trading lower in a very, very convincing way. Nasdaq though, pretty weak to the downside, same as the ES. Pretty good move at that, and they pretty good move at that, and they were down here all the way down to the 20,860s. So on the Nasdaq, we are down here towards this attractor, and they still have ways to go to the 800s. That's your attractor. So I'm thinking that they have more weakness to go on the downside on the Nasdaq. So you can see here they move out of the middle to the downside. Trade this as such. Looked to sell strength, rotations back down, and it just feels like a January weakness. The employment situation wasn't bad. It feels like it's a market, a little bit of a profit-taking sell-off going on based on the rally we had going into the end of the year. So far, though, on the way down, next attractor at the 2800s. Thereafter, it's going to be down here at the 2600. And now on the Nasdaq, we are down with the high here was at the 22,300. So 10% is like 2,200 points. So 22.3, it would be 21, 23. So 20,300. They would basically run it down here towards this 20,500 attractor. So that's where we are right now. That's what would be the 10% pullback would get that all the way there. So starting off on the short side, let's see how far they can take it. So it feels more like an orderly sell-off. It's not like a free-for-all, falling out of bed kind of a sell-off. So it's or orderly, I would say, is probably the word to use. But I would look to sell strength if it starts trading above this 21,170, take off that short bias. But at this point, definitely leaning short to get started. See how far they can take it. So the trades I took on the Nasdaq, there were a couple of trades. They had one here. That was the last trade I took. That was on the way down. They started pulling back from that high. So back to the mean, and then it started heading lower. I gave one to the third bar here. I figured, okay, maybe we're going to test it a low, maybe lower. Usually when you see this, you have a shot at them really leaning into it to the downside. It didn't happen. I went to break even and got shaken out of that trade. And I figured, okay, I got lucky on that one because you can see that then they fake out to the upside. So when they start doing that, you say, okay, fine, there's no continuation. So I didn't want to re-engage it. And here we got a little bit of a pullback down here, but I late in the session like that was the only shot I took, and basically looking for a continuation of that move after they failed to retrace past that mean. But you can see how that little retracement there would have been pretty gnarly. That would have shaken me out definitely with a pretty nasty loss. So I got lucky on that trade. The other two trades on the Nasdaq I took was earlier on. First, I had a short one with a continuation trade. Sorry, this was a long trade, retracement trade. Got shaken out of that. Then I got short to get the tablet for a retest at a low, and that worked out a little bit better, but still shook me out. And so I'm up $28 on those three trades. And I didn't want to be more aggressive. This is pretty freaking volatile, so I will leave it at that. So trade ES and Nasdaq from the short side, looking at oil and gold. So I got a more better explanation on the oil thing, and it's like you said, Gary, the outgoing Biden administration decided it was a good idea to sanction a bunch of oil tankers and oil companies. So that's kind of what the whole thing came about. So this is just outgoing policies from a failed presidency, which is just messing shit up for everyone. So that's what they're doing. If they wanted to do something like this, they could have done it years ago or early on in this conflict, but they waited until they're going out to just create as much havoc as they can, seems like. And doing this, yeah, that creates a lot of havoc in the oil market. And to what avail? It's like, yeah, you had to just shake your head. These people are crazy. Or get them the heck out of here. But anyway, so that's why oil prices spiked like they did. Now we have the explanation. It has to do with Biden putting all this crazy shit on at the very end. And most likely it's going to just get flat out reversed when the new administration comes in and stops the craziness. But it just completely needless and spiteful, vengeful, whatever you want to call it. On gold, but I would trade oil from the, hang on. So I would trade oil from the long side still, but with a lot of caution because I mean, when you have the kind of cross currents going on where they have an outgoing administration doing shit like this, then you just have to just trade with a lot of caution because you never know. Next time they drop a stupid headline and on something which has it just to sabotage the incoming president. On gold, gold is definitely trading based on fundamentals. So they don't like the bond market is lower, and gold is looking like yes, the dollar may have some problems, and we want to get to gold instead. So gold spiking to the upside and holding on to it. So trade gold from the long side of the market. At this point, looks like at looks like the trust in the dollar and given what's going on is not great. So. At this point, resistance at 27.20 held for a short period. They blew through it. Now they're back down. Looks to me like they are right below it now. They're holding that. It looks like we have a new edge here at the 15s worth paying attention to. So going to be looking for continuations to the upside. If the trade below that edge, the 14.15s, look for a retracement trade back down again. But right now it feels very much like the bond market heading lower. Gold looks attractive. People moving money into gold for safety. The indices looks like they are on an orderly sell-off. So we'll see how far they can go. The ES, maybe 5% down, Nasdaq about the same. Maybe Nasdaq is a little bit more, but I think the overall, if you're looking at the 10-15% sell-off, we got some ways to go on the downside before they're done. So I don't know how big it's going to get. If 5% could be good number to start buying stuff. I have. So about 5-10% down, I start buying stock on the pullbacks, especially stocks which have been very expensive and which has a potential to keep growing. So anyway, we'll leave it at that, guys. Back to the ES, and so far looks pretty weak. Let's see what they can do going into the close, but so far it looks pretty weak. Alrighty, you have a great weekend, guys. I'll see you back on Monday, and then we'll start the whole thing over again. Ready, guys, later.